Hello my friends! As many of you may know, this channel is all about food, fun, and finance. Food feeds your stomach. What's important to know is that finance feeds your brain, and that knowledge will help put more money into your back pocket. In today's video, Ling is going to go over with you an option strategy that helps you generate passive income before you even purchase a stock. She's going to go over what this strategy is, possible outcomes, as well as walking you through the order process via Ameritrade. If you haven't already done so, please hit the subscribe button, click the bell for notifications, hit the like button, add a comment below. We greatly appreciate it. Let's go!
This option strategy is called cash secured put. Let me use Amazon stock as an example to explain what this is. Let's say Amazon stock is currently trading at $119 per share. I don't own any shares of it. However, I have done my research and I'm comfortable paying at $100 per share. Instead of purchasing the stock outright, I would sell a cash secure put. The first thing I would do is to make sure I have enough of the cash reserve in my account. Since one contract equals to 100 shares, and my strike price, meaning I'm willing to pay the stock at $100 per share, multiply that by 100 shares, that's $10,000 that I need to have in my reserve. I'm not going to spend the $10,000. I just need to have $10,000 in the account in the event I do purchase the stock. My next step is to go to my trading platform and submit a sell to open limit order for this option. Towards the end of this video, I will take you through a step-by-step process how to use Ameritrade to submit this order. So the cash secure put is really an option strategy to offer up to any potential seller the right to sell their stocks to me at the strike price, in this example $100, either before or at the end of the expiration date. Now you will probably ask, who in the right mind would want to sell their Amazon stock to me at $100 if the current trading price is $119? That's a very good question. As we all know, stock prices fluctuate up and down. Just because Amazon stock is trading at $119 per share today, nobody can guarantee it will continue to be trading at this price in 30 to 45 days. At any point before the expiration date, if Amazon started to trade down to below $100, that's the time the seller would want to get out of their position and sell their stock at $100. And because I'm offering up this option as an insurance policy to the sellers, I will be receiving premium for taking the risk. Even if the stock goes below $100, I will still purchase it at $100.
Great! Now we know what a cash secured put is. Can you tell us what happens on the expiration date?
Let's take a look at outcome number 1 first. Let's say Amazon stock does really well. It goes from $119 and continues to go up to $125. At the expiration, what's going to happen to this option is the option will expire worthless. What that means is, since the stock is trading at $125 per share, nobody is going to sell you the stock at a lower than $125 price at a strike price of $100, right? So the option will expire and you will keep your premium that you collected, and the Amazon stock will not be assigned to you. Assignment in this scenario means purchase the stock. Since the option expired worthless, you will not be purchasing the Amazon stock at the end of the expiration day. Let's analyze the pros and cons for this outcome. On the positive side, you get to keep the premium for selling the put. Regardless what happens on the expiration day, the premium is yours to keep once the transaction has gone through. And the reserve cash is also returned to you for other trades. And remember, you had to keep $10,000 in your reserve in case you need to purchase the stock. The negative side is since the option expired worthless, you will not be assigned the Amazon stock, and potentially you have lost out on some gains since the stock went from 119 to 125. What you can do after the expiration day is you can set up another cash secure put and maybe at a higher strike price, or wait for the stock price to come down and then set another cash secure put at the same strike price for maybe 30 days or 45 days. The beauty of selling cash secure put is you start to make passive income before you even spend money to purchase the stock. As I mentioned, no matter what happens to this option at the time of expiration day, the premium that's paid to you is yours to keep. And you can sell cash secure put unlimited times, so you can repeat this process over and over and over again.
Well, Ling, this strategy sounds like a no-brainer if the stock keeps going up. But what happens if the stock price trends downwards?
Scenario number 2 is if Amazon stock start to go down after you sold the cash secure put at $100 per share. Let's say Amazon went down to $95 per share. If you don't do anything before or on the expiration day, Amazon stocks will be assigned to you. What this means is your trading platform will take out the $10,000 reserves and purchase the stock at $100 per share for 100 shares. The good news is you are going to buy Amazon stock anyways at 119 per share, and now you are buying it at a lower your specified price at $100. And secondly, you still get to keep the premium when you first sold the cash secure put, and that's yours to keep regardless what happened to this option. The negative part about this scenario is that you will incur a short-term loss since the market price is probably below the $100 price that you have purchased the stock for. And if the stock doesn't rebound, you will need to continue to hold on to the stock for a longer term. That's why for myself, my trading rule is I will not sell any cash secure put if I don't wish to hold on to a stock. Let me quickly summarize what cash secure put is. The name of the strategy is cash secure put, sell a put, or short a put. They all mean the same thing. When should you use this strategy is when you have a bullish bias for the stock, or you are ready to purchase a stock, you have done your research and homework, you're ready to buy. You wanted to hold on to the stock for the long term. The benefit of selling cash secure puts are threefold. Number 1, you can set your own purchase price, and usually this price is below the current trading price. Number 2 benefit is to reduce your cost basis by receiving premium for selling the cash secure put. The number 3 benefit is there are many exit strategies. In today's video, I only talked about what happens to this option on the expiration day if you don't do anything about the option prior to the expiration day. I will have the next video coming up to show you how to manage your cash secure put options.
Okay, very nice. Can you show us step by step how to actually place the order?
Let me walk you through a quick demo in Ameritrade how to submit this transaction. The option strategy field should already by default selected for you as single order. You want it to leave as is. In the underlying symbol, you can enter Amazon AMZN symbol in the field. Under the action, you wanted to select Sell to Open. I'm using 100 shares, which equates to 1 contract for the contract field. An expiration date, normally I would use 30 to 45 days from the date of transaction. Since this video is recorded on October 22nd, I'm using November 25th as the expiration date. The strike price we talked about for the demo is $100 per share. That's what I entered under strike. And this is a cash secure put, and therefore I selected put. As soon as you enter all of the details in the fields, as you can see on the right hand side, the bid and ask price has populated for you. And I normally choose a middle price in between bid and ask for my limit order price. For this demo, I'm entering $1.55, which is the middle price between the bid of $1.42 and ask of $1.67. If this transaction goes through, that means I would make $155 as my cash secure put premium.
Thank you, Ling, for sharing your knowledge. I hope all of you enjoyed watching this video on how to utilize selling cash secured puts for income. If you found this video helpful, please subscribe to this channel, hit the like button, and share with anyone who may also benefit from this knowledge. See you all very soon. Bye.